Hi, this is Elliot Wave Sage. I want to go ahead and do a market update. And like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. So the market continues to grind higher as expected. Uh, as we could see, this was a great area to load up, and now we have come out and we're starting to extend higher. So as we do this, the market should continue to push upward, but it should continue to be choppy. In fact, here you have an impulse that has ended. This could easily become another 1-2 in the Dow. So I could do something like this for a sharper pullback and then out. So we don't know to what degree we're going to correct, but it does seem like we're going to get some kind of pullback in the market soon, and then that should still be supported. The Dow could also finish this sequence and then pull back sharply and then come out. A lot of options. The SPY, the same thing. It's finishing this impulse, and we should pull back eventually and then down and then out, which would kind of complete that inverse, you know, somewhat of like a continuation pattern, right? Out. So we don't know where we're going to go with it. And again, we could make this 5 and then have a 1-2, 1-2, and really come back down here, fill these gaps. So there's a lot of, it's going to get really volatile and choppy more than likely. The least probable outcome is it just keeps going up, right? So, but that is an outcome, right? It could still become a 1-2, 1-2, and we just get out of this. So the trade I expect, looking at the charts and everything, is a lot of choppiness and pullbacks, but all supported in the end. And eventually we will take this high out at 524, and then we will be on our way to the 550s. That's what I see happening in the market. Pullbacks support it, and choppiness. The easy money is over. If you missed the move, guys, it's over. You're going to have to wait for another really big pullback to play the indices. So the move is over. The money, easy money has been made. It's now people will be taking profit, and some of that may have happened today. Now, the thing we want to also respect is the three-wave move. Now, everyone's obsessed with this B wave, right? And if you've watched my other videos, I've said, F the B wave. I don't care about the B wave. I'm not short in this. Here you have three waves, okay? Connector, three waves. Where's your three waves here? You don't have three waves. This is it. So this doesn't have the right, the wave structure internally of the C leg does not look, does not have the look I would have expected to be corrective in nature. So if you're betting on a C leg in the tech, and this is just going to go to new lows, it doesn't appear to be, because this C leg, if this is a C leg, there's an A leg with three legs, but the subdivisions in that C leg don't support that. Now, today could have started the first pullback and then up and then down. It's possible. Now that would be more bearish, right? You have three, you come up, three, and then you come down. So that's going to be interesting. So we really want to see like finishing of this impulse, and then a pretty big pullback, I'm thinking, and then out. The unexpected move is this is a 1-2, 1-2, and then it's off to the races and everybody's left behind. Aggressive trader has a setup in the NASDAQ here at 438, right? 438 right here. We'll see if we get that. That's a possibility for a dip buy. to play wave 5, and if you're really lucky, you get wave 2 and you get a wave 3. And then, of course, you want to stop out because if this could also turn into another 1, 2, right, and pull back deeper. So it's a gamble, but it is a play that we have in the Nasdaq. IWM, again, finishing the impulse and pulling back in this 4, 5, almost like the Dow, and then a much bigger pullback, right? But this may not happen. But this is a lot of choppiness, sideways action. This is the most likely path. But there's so many other paths. That's why I don't like trading it here. The opportunity is gone. So now this is day trader battles happening. But eventually, it will resolve bullish. So we'll see how it goes. So that's how I look at the Nasdaq, guys. Let's go look at the Hang Seng. So the Hang Seng is very interesting chart here. Obviously, we're in this first impulse. If we look at our RSI break, we do have a clear break here, right here. The 4-hour looks like it wants to break down, but we don't have divergence. So there's a lot of ways to label what I have here. A lot of ways to label what I have here. But for right now, I would expect this first impulse here, this impulse, to either have ended here or ended here. And you got a very shallow dip, very bullish. Or we make just one more high and we pull back. So this is too difficult to chart right now because there's too many possibilities. I would just say right now I still look at it as 1, 2, 3, 4, 5 with a 1 here. That's how I would label this. It'd be nice to get another dip a little deeper here, but we may not. It may already be finished too. So we'll have to wait and see what happens. Then Bitcoin is pulling back, so we have 5 up off the low. We have 3 waves. Bitcoin should hit 61,600 and then be supported at wave 3. Now, if this happens, more than likely the market's going to go higher in a wave 3. Not guaranteed, but that's telling you, maybe you shouldn't be too bearish the stock market. Link coin, same thing. We broke the pivot. We're heading down to 1370 and hopefully come out of that. Oil has been weak. We're in this wave 2. Wave 2 could still make one more impulse higher, A, B, C, and then drop. I consider it another 1, 2, 1, 2, 1, 2, and then you get your 3 of 3. Silver, I like silver. It finished its first impulse off the low, and now we're pulling back in a wave 2. And looking for support right around where we are now, maybe a little bit lower. A nice inverse head and shoulders type pattern, and we come out to take this high out, make the journey to get to $30 silver. Again, this was a great opportunity. It was a wedge. I showed this wedge on my video, and we broke out. So that was good. Gold, same thing. Now gold, we had a 3-wave move with a connector. We failed, so we're going to go take another dip lower in gold. This looks like impulse off the low. And if that's the case, gold would be a buy at 23,100, 22,096 around this area for potential wave 2. So there's some better setups in Bitcoin, the precious metals. The indices are not really tradable or advised to be traded here based on what I'm seeing. Platinum is starting to make a move, starting to extend out which is what I'm hoping to see. I want to see this one taken out here at 1008. Dollar index looks like it's too big for a wave 4, so we have another 1-2. Another 1-2 here. Foreman. Another 1-2. And it looks like it's a triple. Another triple that should be ending at any moment, which seems to make sense looking at gold and silver and Bitcoin, you know, getting close to where we want it to be. The 20-year really broke down nicely in our sell area, and I would just say continue extension in wave 3, and this should continue to unravel. I could label this as a 3-4-5 for 1, 2, 3, 4, 5, or it's wave 3 will just extend. I'm not labeling it. It should be short bonds. I'm sorry, long bonds already in the way I had it, and I'm just now gonna stay in my positions in bonds until the pivot breaks. If it does, I have no interest in selling bonds until the 20-year is down at 3.3. Pretty dramatic drop coming. So this is telling me maybe a recession is already here. Maybe inflation is dropping more than we expect this summer. Who knows what this means? But it does show something. Something scary could happen to drive rates lower if this plays out. Now, if we take this pivot out, we have a connector for this entire move, which should take us out, take that peak out, and should create an unraveling in the stock market. So without looking at all the data, if bond market does take these pivots out, this peak out, okay, if we do take this peak out, it would be probably wise to get more defensive in the market. I'll just say that. What to do, we'll reassess, but I believe aggressive positions would be unadvised if that takes out that peak, especially in the 10-year, this peak. Oil's the same thing, guys. Oil's the same thing. This peak here at 88. As long as we're below those levels, those key levels, the market, I think, will continue to be in a bull phase. If we take those out, we will probably enter another swing lower in the bear phase. And the C leg will play out. And we will start to come down into these areas. This is my thinking. But do what's best for you. This is how I see it right now. But obviously the bulls are in control. All right, just go through individual stocks that I know you like to trade. So Apple looks like it's finishing up this 4 wave here, ready for a 5th wave, and then a pullback. Okay. Then Tesla setting up for a potential great opportunity to get in at 164.74. And I also like TSLL at 650. I like that even more because if Tesla is in a super cycle wave 3, if this count is right in Tesla, guys, if this is a 1-2, 1-2, 1-2, TSLL is a buy of a lifetime right here if it can do it. If it can do it. If this count is right. Now I can't be wrong. Do what's best for you. Tesla could make a new low. Now if we take this pivot out at 138, we break down and really come down, then Tesla's guy's in a lot of trouble technically. So it's got to hold this, but this is a great area. This is a great area. So all I want to say is keep an eye on Tesla if we can pull back. Adobe finished its fifth wave. It looks like today pulling back in wave 2. And how's AMD doing? in the B wave, right? Then Nvidia could be a 3-4 here, or could be another 1-2. Don't really know. Don't really care. Okay, Palantir. So Palantir was blew a lot of people up because they chased this little pump here pre-earnings, but we were in it at 20, literally at the low on the three-wave move. So the next buy area is 1841 in Palantir. And I believe because the move is so sharp and sudden, I believe it will double correct lower. So I do think Palantir will make a double correction where we bounced, where we expected, and we failed, and we will come down to this area here. So how you go like, how does my trading system like recover from such a thing? A lot of people got blown up. Well, the first pullback, we had the connector wave, right? We had the connector wave down here, and we bought here at 2074. And we rode this all the way up, which was nice, 25.48. And then earnings today, we saw this move. Now, you could still hold that position and be in a profit and just make the market stop you out, because there's a chance this could be a 1-2 and we continue higher. I don't think so, because based on my experience, this kind of crash, and really you could call this a three-wave move. We don't really see 5 here, no divergence. I think the odds of this being a 2 is low. So the best way to trade it for me is to just take profit, take the little bit we have, and then buy it back here at 18 when we get there. And what happens if you miss the move? Well, we missed the move, right? If it comes up, and that's fine. But that's how I would trade that. That's how I trade that. That's what but you have to trade it how you want to. And you could see, even with what happened today, you still have a profit using the system I use to play with. But like I said, if you really love this thing, you just stop out here, buy it back at 18, or you just bought it at 20 and you buy more at 18. But whatever your strategy, this is what I think is going to happen. Do what's best for you. You see how you've chopped, so it should chop around here and come down into this area. That's my thinking. If we do come up and make a new high, discount may be in a 5th wave, and it may be like 1, 2, 3, 4, 5, and 1 here at like 31, and then drop back down. So very, very tricky count based on the new information. But this is kind of how I would call it. 1, 2, 3, 4, 5. I call it that way, and then we pull back to 18, maybe even deeper, and then out. Just looking at different things. So China looks like we are getting that pullback finally off of this impulse in a wave 2. So it does look like we are correct in this cycle. It's over, and we should find support soon. Maybe another swing lower in these stocks, Baidu, Baba. Now Baba, I have it in a wave 5 here, but it could also be a 1-2, 1-2 as well. Neo, we did get that dip. We just missed the area here, and then we extended higher, and we're back in 3 again, and it looks like it wants to take another dip lower. So what I'm thinking with Neo is I'd probably just put the 4 here and 5, just kind of rearrange the wave count just a little bit, just a little different. Or better yet, I call it a flat. I would actually call this a flat now. So do what's best for you. Something like that. That's what I'm thinking we'll see in Neo. And how's crypto equivalent stocks doing? Let's take a look. So Coinbase should get one more swing higher, I'm hoping. Mara did get that pump like we wanted. Now the X wave can end at any moment, although I would expect it to go higher just a little bit more. So we'll see what happens here. MicroStrategy bounce it in the B wave. We should get C. LTCN. So we did break this low. So we negated this pattern, and because of that, the X is in here, and we're already breaking down in Y, heading down in X, like that. This one's still valid. Okay, just again, clicking through different things, guys. Then let's see, healthcare. Let's go to healthcare. Healthcare. Yeah, there's a lot of weakness here. Nothing interesting. How's mRNA? We nailed this, guys. We've really traded mRNA really well. Buys, buy, another buy where we wicked in, and then we got the wave 3 out. And we're out. We're totally out now. Total reversal. Yeah, mRNA, guys, looks good. This is one to keep your eye on for dip buys. If we get bigger pullbacks, there's a connector wave. So perhaps you can get a pullback here down to 113, 110 for another potential entry. Then I gave you guys Eli Lilly, I think, on one of my videos. I said to buy that wave too, and we basically, that was probably one of the easiest trades out there. But now the trade's over. Now if we want to pull back again, I would just do the same thing. So we'll see where Eli Lilly heads. All right, well, I'm going to end this video now. So I would expect a lot of choppiness in the market. So the indices in general are going to chop around here, and then at some point have a much bigger pullback to correct the whole thing. And then the wave 3 of 3 moment, the moment every bull has been waiting for, the big move. So I think, I don't know how this is going to go down here, but this is the most likely path. But it could do obviously a lot of, it has a lot of options in this area, but I would expect a lot of volatility, a lot of ups and downs, and a lot of just general confusion. But I showed you some setups that aren't related to the indices. And then if you're a true bear, you really, if you could take oil out at 88 again, you could even take the dollar index back out at 106.5, or the 10-year you take out 4.75, then things are going to get crazy in the market on the bearish side. And in fact, that would be a signal for me to get much more defensive of the market and start to look for opportunities on the bearish side, and start shifting my thinking. Now, would it mean sell everything? No, because we've already talked about all higher rates means is indices and growth are hit hard. Tech is hit. Russell's hit. Growth is hit. All this is hit. But higher rates could also mean higher energy, higher gold and silver, higher Bitcoin for some reason, because this is like called the inflationary trade as inflation gets out of control. So we don't know, so it isn't like, oh my God, sell everything, risk off. I think there will be a lot of instruments also hit in wave 3s of 3s, just not the ones you typically trade every day. And we'll have to go hunt and find where those are and get in on those and dump the Apples, the Facebooks, the Nvidias, and dump all that. All the stocks you love and adore and cherish. If this pivot goes, you're not going to want to be in any of those anymore, because technically there's a lot of space to the downside for these things to correct. This is coming. You see this? That is coming. Now this 5 is going to extend, right? And it could continue. But at some point that's going to end, and when it does, you're going to get this big pull. This whole thing will go away, and more than likely, I'm thinking we'll come back down to this consolidation area. So I expect a massive correction or drop in the market to correct these cycles some point in 25, somewhere around here, right? You know, maybe somewhere around 20, and then we start reversing, because this will take time to play out. It won't, you know, it'll take time, and then sometime in 25, it's like, oh no, and then we get into 26, and it's all hell breaks loose. So that's what I'm seeing, guys, in the market. So just know there's a lot of space to the downside. Even Apple, right? Apple is in a super cycle degree correction. We could still drop in this too, back down to 100. So there's a lot of room potentially, and so we have to keep an open mind. And Elliott Wave Sage always uses intellectual stop loss, not just financial stop loss. So while I think the market will go higher still, and I'm still long, and nothing is shaking me from the belief since mid-December, we lose these pivots, guys. This one the most important, but this would do it. You lose those, this market, the character of the market is going to change dramatically over the next 12 months. And we have to trade that. The market we have, not what we wish it to be. We wish it to be bullish, to come up to here, but it may not. And this wave 2 may drop and come all the way back down. All the way down like that. You may get a 1-2, 1-2. Or worse. What if it's only 3 waves and we still get the flat and we come all the way down and break those lows? Right? Could that be? I don't think it's possible given the internal wave structure of the Dow Jones. To me, the Dow Jones negated that with this little peak right here. If this didn't happen in the Dow Jones, then I would say that the flat is still in play. But because that peak happened, I think that is the internal structure won't allow it, because this will have to finish and it'll be too big. So I think that. So I don't think that. So I've ruled out the flat correction, although, you know, that's the bear dream. What I am saying is this wave 2 can go deeper and be sharper, and we can come back. You know, we could come back down to 445 even. So if that happens, that's got to be a rate scare, an interest rate scare, an energy scare, an inflation scare, where this comes out and we start trading up here. And then maybe we pull back against, maybe this cycle corrects and we pull back and the market can rally again, and then we get a massive crash later. So I think like there's a lot of options, but right now the bulls are fully in control of the market. There's so many pivots that have to break technically before I would be worried bearish right now. It's just the situation we're in. We've got choppiness, and then a decision that's more than likely will play out to the upside and allow this cycle to really finish up. And again, my target's 600, 610 SPY, but it could it may not make it all the way there, right? It may not make. We will have to wait and see how far it can go. But based on everything I know, if we can't erase divergence on this push and we're trading here, I'll be out in the market. And then I'll be doing another video for you guys, my original followers, like I did back here in December, 2021. I started my channel December 21, and I said, guys, the Santa rally is a trap. Get out. All the stocks you love and own are going to crash. Tech is screwed. And I gave you guys my technical warning, and it played out. And then here I was like, buy tech, buy tech. And I got the worst like IMs and DMs, the most threatening messages, but mostly because I think the pros were like, hey, you're giving the answers to the test. Don't tell people to buy. We want them to sell so we could steal their shares. The most hate mail I ever got was to say go long here. And I even stopped my channel for a little bit because of it, right? And then we rode that, and then took profit right around this area, and then we missed out on a little bit, and then we came in, and then we started shorting here, shorted here, shorted here, made all that money, sidelines, and I was pretty much sidelines. And then I just let the market decide, and then we came out of this area. And once I got more confidence that we were out of a flat scenario, because this could have turned into a flat scenario, then I looked to get long. And then we've been long ever since 470 through here, but individual stocks. So that's how we've traded this. This whole thing has been traded very strategically with minimal risk. A lot of reward. Did we get every swing? No. Did we get the exact low? No. Exact top? No. No one does. But is our account blown up? No. Did we make money? Yes. Did we, enjoy it? Yep. Do we have good positions and things? Yep. But now what I'm trying to say is this move, this impulse here is going to end this year, probably toward October, November timeframe. Ironically, right around the election. And then the market should slow down and top out in this pattern. And maybe this is lower. And then that's it, guys. That's it. The grand super cycle is over. It's over. And then it's time to prepare for the super crash. And I think we see the seeds of that being sown of what's going to cause that already, right? We see those seeds being sown, and that's the interest rates. That's when this cycle finally comes to an end and we come out. And once we break these rates, I believe there'll be a government financial debt crisis like we've never seen in our country, and sovereign debt crisis, and then who knows how it ends. But that's what I think this grand super cycle is saying here when this is finally over. That's how I see it. You know, every pullback, every rise needs a pullback. So does the grand super cycle. Unfortunately, this market has never seen something like this before. There's a lot of investors so complacent on the bullish side, and they will probably lose everything they own. And a lot of famous investors will probably lose it all because they'll buy in too soon. But we have to understand where we are in the cycle. So the thing is are we picking up pennies in front of a steamroller here? I don't think so. But when we're in this area, I think we are. And I think it's prudent to be conservative and just day trade the market from here on out in this area, and then just be patient and wait for some calamity, whatever that is. But for right now, I think this is going to continue, guys, and I do think you got one last nice pump coming. One nice pump coming this summer, right into the election, and then problems start to sprout. Could it be a constitutional crisis? Lead into a sovereign debt crisis? Two presidents that don't concede the election? Could it be, Russia just says, screw it, let's nuke everybody? Could it be bird flu starts spreading We don't know, but this is in the next, I think in the end of the decade we're going to be in some dark times in the stock market, guys. I don't believe in Moon Boy. I don't believe in a super pump, guys. I believe this will top out here, and that's it. So enjoy the bull cycle while you have it, but I do think the last 5 years of the 2020s is going to be uh, pretty historic, and whoever's elected president will be blamed for whatever happens, as well as the next Fed chair will be considered the devil. Powell, the hero, the next Fed chair, the devil. They'll do everything wrong that's supposed to happen. They'll be blamed for it along with the president. So whoever you want blamed should win the election for what's about to happen. So whoever you hate the most actually should win, because then they'll be blamed, and that party will probably go out of existence because the American public will blame them for whatever happens here. That's the sad truth of what I think is going to happen, guys, based on these charts. But to change my mind, again, we need to erase divergence on this move higher. If we can do that, then this bearish forecast goes away, and we have something very different than anyone can ever imagine. So we'll know when we're trading here where we are with those divergences or not. So anyway, that's how I end this, guys. So good luck. I do think this is a good opportunity to get long, especially if we get a big pullback here. But until then, it's just a lot of choppiness coming. The surprise to me would be just we V out of this thing. We V out. I would be surprised, but I can't rule that out. I cannot rule that out. That's why I would not sell this chop at all. I would not be trying to be cute. Oh, I'm going to sell a B wave. You could be selling a 3 of a 3, and you'll be destroyed. So just get ready. All right, guys, that's all I got.